Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 27th, 2020, and it's 9:44 a.m. in London when we're doing this market update. We're going to take a look at the markets as we usually do at this time of the day, see what's happening, and try to share a few charts with you as well to give you an idea of the levels that people are watching. Now, if you're new to this, my name is Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX UK. I'm also the head of the site Investing Cube, which is a site I created and offers you a lot of market analysis and news. And that's where we usually host this morning webinar. However, today we're having a bit of issues with the site, and hopefully that will be resolved soon, as soon as the developers have time to check it out. So if you do have any difficulties with the site, please check in a little bit later. Hopefully this is going to be resolved relatively soon. Okay, good. All right, guys. So what's going on then? What's people talking about? Well, Boris Johnson was on the TV just now recently. He's back after being sick, and if you saw the speech, you know, he's definitely not 100% where he usually is, but he's close to it. And it's all about the comebacks. It's all about coming back, and it's all about reopening the economies, because that's where everybody is looking at right now. If you look at the number of new coronavirus cases across the world, they're really low. France is close to 0%. You have a place like Italy, which is 1 point something. It's literally almost 1% across the board in Western Europe, except for the UK, which is the 3%. And then you have the US, which is at 3 point something as well, 3.8, I think. So things are going in the right direction, and that's why, you know, people are quite upbeat. If I just look across the board here, most stock markets are up. Aussie dollar is up, New Zealand dollar is up. So it's definitely what we call risk on. People are definitely getting excited about the situation, and I think this is something I would like to continue to work with. Of course, today or this week, we do have some data coming out. You got the GDP numbers, you got the ISM report, and you got the jobless claims. They are all going to show that the U.S. economy are struggling. U.S. jobless claims, initial jobless claims, has shown that about 26 million Americans have lost their jobs over the last 5 weeks. Surely we'll have another 4 million or so this week, potentially, taking up to 30 million. But I think the reason why people are ignoring that for now is because we know that that is man-made. You know, we wouldn't have 26 million unemployed people if people were staying at home. Or if people were out working, for example, we'd definitely have much more death. And I think that would have been bad as well. But if you think about it, when things start to improve, there's going to be a situation where suddenly you have maybe half of those people that lost their jobs coming back, because what a lot of the people or business owners in the US are doing is that they're closing down shop. They're you know, telling these people to stay at home just because they know they're not going to be able to pay them, and if they have to pay them throughout this period, you know, the company or the restaurant or wherever it might be out of business. But now the government is shouldering that, and then for anything that the government is not doing, the individual themselves would pay the price for that. So that is what's happening. But then if things go back to normal, things can change. Of course, there's some other bunch of stuff there is sort of could create a lot of problems, like crude oil being down and trading at $14.69. That's a huge thing. If that starts to create a bunch of bankruptcies across the crude oil producers, it could easily translate into weakness into other parts of the economy. For now, the DAX is bullish, the Dow is bullish, the Nasdaq is bullish. Most stuff are bullish. Other stuff look like they want to hit higher. So I want to ride with that flow until proven otherwise. But we have all that data coming out. Other thing as well, this week we have Fed rate meeting, the ECB rate meetings. So what's happening there is that the Federal Reserve has done so much over the last few months and weeks, that there's probably not going to be a huge change on the ECB front, though. And there's conversations and talks that maybe they're going to be allowed to buy junk bonds, because we are seeing yields in Italy being higher than than the ones against Germany, which means that people are speculating that or selling Italian assets. So we are having a bit of an issue there. But if the ECB can go in and buy the debt of some of these Italian banks or other Italian businesses, then that could put pressure on the yields and they can normalize. And then when these companies need to refinance, they have the ability to do so. So that's going to happen today, and if that would happen, then that would definitely be a bullish thing for the euro, and it's definitely probably going to be a bullish thing for the German DAX and other European stock market indices. So that's on deck today, or this week. Another thing before I forget, you got the Chinese numbers coming out, the Chinese PMI numbers. Remember, China locked down before us, they opened up before us. The PMI numbers from China have bounced back nicely because the numbers from last week that showed the PMIs from Europe, they were horrible numbers. I think the PMI for Europe, the composite, was at 13.5. The indicator goes from 0 to 100, and the thing is at 13.5. It just shows you that the whole of Europe has gone, the US economic system has just stopped pretty much. And if the numbers from China are to be followed, they had a decline. I think it was at 29 or 35 or so, and which means that the decline in China was less severe. But then what happened is you had a nice little bounce. So if that happens, then France is set to open soon. Spain has already opened parts of their economy. Italy is also set to open. The UK might also open in May as well. You got places like Austria, Norway, Czech Republic, also already starting to make moves. Denmark as well. So realistically, the PMI numbers for May is going to be much better than the current readings, but the levels from China can give us a bit of a hint of what to anticipate, and that is what makes that interesting. So that is some of the data coming out this week. For now, though, German DAX again remains bullish. It remains bullish about 10,088. Last week we said look to buy down here, and the market has gone up a bit. I'm not going to change my bias yet. If we do trade below 10,088, I think we can go lower. If we look at something like the S&P 500, we said look to buy down here, and that worked out fine for now. And we're pretty much where I wanted to see. So this is a good spot to book profits. I will book 75% of it and then see if we can go a little bit higher. There's always a risk that we may break to the upside and go higher. But you can check out things like some European stock market indices, which are very, very close to take out their levels. And it could be good to potentially shift some risks to European stock market indices as you're trying to catch up with their American indices here. So that's what I would have done. I'll probably book some profits here, even though I think we're going to go upwards. Why? Because you can see here, we've been rejecting him many times. And right now, the theme of the day is happiness and bullish price action. But, that might change. And then you may have a situation where you find the index down here again. But overall, I think we're going to go higher. If we're trading at 3,000 and then maybe 3,126, that would not surprise me a single bit. Okay, the central banks are pumping so much money into the systems. Governments are pushing so much money into the system. And then you have the reopening, and then you have just normal euphoria that all the people that sold on the way down here, they're going to be buying here now at these levels, probably. Because that's what the average retail trader does. So I'll continue to be bullish for now. All right, let's talk about gold prices, and then we took a look at crude. So last week we said look to buy down here for this to go upwards, and we reached that level. So that's a good little spot to book profits. Doesn't mean that we can't trade higher, but I will book profits where we are. If we go down to 1686, I'll be bullish from here. We'll stop just below it. Take out that high, we can probably go upwards as well. In the longer run, we're going to go upwards, I think, because all these governments are printing a lot of money. If I'm wrong, though, and we take out this low here at 1656, we can trade down to something like 1567. Let's take a look at crude oil prices, where we're doing really good there as well. So remember this. We were trading here somewhere, and I said, let's go bearish at 17. And then the day afterwards, when the price was still below 17, was a 16 point something, I said let's sell at 18.13, and we reached that spot perfectly, actually went above to 13.27, and since then went a bit of profit. We're going a bit lower now, and I think if we can get out at 11.50, that would be a very good opportunity to get out there. And when that happens, that turn of funding level is going to be put down here. Now, if you're looking to buy for the long term, don't do it unless you have the ability to actually stock it somewhere, which most people don't. Because the way the futures pricing is that you might remember, like the May contract expired at 0, if not negative. It declined to negative $43 per barrel. But around the same time, you know, you had the June contract. It was pretty much at 22, more or less, and then it went down a bit. But key point here is that the futures prices are much higher than the spot prices, because people think that prices are going to be higher in the future. That's all good, but because we're trading on futures contracts, if those prices are already higher because people already think we're going to be higher, then it doesn't make sense. So for example, if I load the price for, this is a crude oil future for January 2021, and that's what's happening, guys. Some of the ETFs and stuff are changing things for January 2021 or so because they don't want to be part of the problems we saw. But that price is already at $28 it's at $20 a barrel. So it's only if you think, well, the price is going to be higher in January 2021, so it's going to be higher than $28, that it makes sense to buy it. But people think that this is where we are right now. So even though your crude oil future price right now is at 14.63, you can't make many money on it unless you can take delivery and keep the crude oil somewhere, and then come January 2021 and you can sell it. Alternatively, you buy the spot for 14, you sell here, and you make $14 a barrel pure profit. But that is if you can store it. But very few people can store things right now, and that is the issue. It's also just crude oil at Cushing, Oklahoma as well. It's not, you know, your Brent crude oil. So bear that in mind. What else? Let's take a look at currencies then. So why did I put currencies into the back end then? Because currencies, unfortunately, are just doing nothing. They had a very nice move in the euro dollar upwards. Actually had a very nice move to the downside that we work with, and that worked out fine for us here. And then we had that big move. I was not really ready for that, and I was not really ready for the decline. I prefer focusing on stock markets. And it's just a lot of sideways price action, which just makes life very difficult. Now, the outlook on Friday was to be bearish from 107.82, and we're moving straight towards my trend finding level, which is a 108.73. I think we can reach that, but for now, I'm just going to leave this the way it is. It's usually not a good idea to change the plan last minute. And it's not a good idea to book profits too early either. But I'm going to leave it the way it is. Losses, sorry. I'm going to leave it the way it is. Maybe it'll come down. But it looks right now that that breakdown was a false move, and we're going to trade sideways. I wouldn't get too excited though. This is super common, very typical when you have this high volatility that you have a ton of false breakouts. And many times it's better just to look for some horizontal support and resistance before doing anything. Here's another one. This is GBP versus the USD. So a few days ago we said sell here at 124.18 for it to go down. We hit that spot on, and then I said if you really want to trade, you have to trade, you can sell up here. I think it was 123.49 or so, and stops up here. Well, unfortunately we reached that stop, and now we're pretty much just below that stop level. So I'm no longer bearish, but I'm also not bullish. If you look at this pattern right now, it looks like a head and shoulders with a head, left, and right shoulder. So I do think we can probably continue to trade lower, but I wouldn't get too excited about it, okay? I would not get too excited about it. Let's give this some time. I think it's just going to trade sideways over this next few days, and then maybe we might trade below 122.42. This is level here, and we could trade lower on the back of that. Dollar yen is bearish below. It will turn bearish on a break below 106.89. Be very careful here, because the way this works, we can have some false breakouts. How can you deal with that then? Maybe you can let the market slide, close here, and then the day afterwards you sell on the rebound. If we indeed trade below this level, 108.16 is going to be my trend funding level. Okay, let's see if you guys have any questions. So anything. Okay, so we do have problems with the site today. That's why we're doing things on YouTube. And unfortunately, it's 10 o'clock, so we need to leave you soon. But Stefan, good morning to you. I hope you're doing good. We have Marvin here as well. And we have Liz. We have Latifa. We have Trimvention. Haven't seen you for a while. Thank you so much for joining us this morning. And we have HTM Moyo. Good morning. Alex says Humphrey from South Africa. Good morning to you as well. Okay, good. So I think I need to leave you guys, but I will see if I can answer just one question. Okay, actually, it's time for me to leave now, but let's see if there's a question here. Dollar CAD, I'm short from 141.35, and sorry, I'm short from 141 going to 135. So let's take a look at dollar CAD. Let me just lower the volume. I'm gonna get a call 80-minute now. So this is dollar CAD. So dollar CAD, unfortunately, is a bit of a mess to me, and there's conflicting patterns. You get head, left, and right shoulder. So you have a short-term bearish pattern like that on a break to the downside, and then you have a bigger head and shoulders, which is the head, left, and possibly a right shoulder here, and that one gives you this target, right? So unfortunately, it's a bit conflicting. Longer run, I think it might go a bit lower. I think so the Canadian dollar could strengthen, but I wouldn't be betting any money on this one because we're pretty much just trading sideways here, which just makes life a bit difficult. So I wouldn't lie myself here. What I suggest is that you check out another CAD pair. I have CAD Swissy. I'm looking at that one, and there's some bullish bias to CAD Swissy, so that could be something. I saw some other stuff as well, but CAD Swissy probably could be a better option in current conditions. Okay, guys, we're gonna wrap things up. I want to thank you so much for joining me. Hopefully, we'll be back on Investing Cube tomorrow, as we always do, and we'll definitely be here. So I think one of the things you could do is to subscribe to our channel. That's very straightforward. That way you get a notification. There's also a little bell button you get here as well. Don't forget to like the video as well, and don't forget to comment, especially if you're watching the recording. Okay, guys, have a beautiful day, and I hope you guys have a beautiful, good week, and I'll see you guys tomorrow. Thank you, and bye-bye.